And property management, I think, is the biggest key to a property success. The correct property management and the correct professionals working there and your relationship with them is going to determine your success. I know that some of them are more expensive than others, but be careful what you pay for, because some of the ones that are really cheap, I mean, what are you going to get down the road?
Today, I have with me a very wonderful guest. His name is J.T Lynch. We are in between doing a deal at the moment. JT is an insurance broker and a very wonderful one at that. I know how many times I've given him deal to give me a quote, deals that never pull through, but he was always ready and his turnaround time was really, really good. So I am welcoming everyone to this segment of Ask the Multifamily Expert. And we all know, like I always say, this is an opportunity for everyone in their multifamily journey to come on board and ask questions and continue your multifamily journey. Most times these things are paid. You always pay money to get access to some of these people to answer your questions. But this time around, we are bringing them to you to have this free access, one in a lifetime opportunity for you to ask them those questions that you've never really gotten answers to, or the ones that you don't really understand and all that. So that's why we have someone like J.T Lynch on our program. JT, this event is personal to me because I have my own personal questions to ask, and I know
Sure.
other people have their own questions. So I will go ahead to talk about what we'll be really discussing about today. We know that in multifamily, insurance and tax have been the highest operating expense that we have, and it's very important for us to control or see better ways we can handle those kind of expenses. Although, in quotes, those expenses cannot be managed, but it can be mitigated in the sense that you can shop for better insurance or litigate your taxes to get a better taxes. But today we'll not be talking about taxes. We're talking about insurance. Who else is a better person for us to have called is Ramey King. Ramey King gives you different quotes when you have a deal. It does not just go about getting you one quote. It gets you the best quotes that will help your deal, and not just the best quote, the coverage. Today I'm going to ask you some things about coverage. But before we go into that, please tell us a little about yourself. Who is J.T Lynch?
Thank you again for having me. Happy to be here, and I know this is your baby, so yeah, happy to be here and answer the hard questions. And insurance for most people, I mean, even your personal home and auto, like most people still don't understand a whole lot of it. So happy to answer any questions that you have. If there's something I don't know, I'll find out for you. So ask away. That's what I'm here for. But I'm located here in Dallas, Texas. We're a small family-run agency. I've been around since 1881. We've focused on multifamily insurance for over 35 years now. That's really our niche, and really something that we pride ourselves in. And we are licensed nationwide. We do a lot of business here in Dallas and Texas. As you know, there's great deals all over now, Georgia, Tennessee, the Carolinas. So we can write anything, and happy to help anywhere. We're a full service agency, so I do have clients that are, have trucking companies, construction companies, nail salons, things like that. But probably 95% of what I do all day long is all multifamily insurance. And like you said, I'm a broker. I don't just have one product to offer like maybe Germania does for your home. I go out to the market to find the best options for you that will meet lender requirements, and the best coverage as well at the lowest premium possible. In a hard market like it is right now for all insurance, but especially multifamily, it's really important to have that specialist on your team that can go out and find the best options for you, that's used to talking to underwriters and working with lenders to get these deals done. Because like you said, it's insurance and taxes are some of the hardest things right now. So having that specialist is really important.
So are you saying that you also do single families because you said you do virtually everything? So even single family is among your portfolio, correct?
Yes, absolutely. We can help with single family in Texas and the surrounding states. There are a few other states we may be able to help, but yeah, mostly in Texas. And I just renewed my home and auto, and I have this personal line girls in the office shop it every year just to make sure I'm getting the best bet. I'm with Germania right now for my home and auto, and it's the best option right now. But next year I'll shop it again for sure. So.
It's good that you are telling us this because I never knew. I thought you only limited to multifamily. So now that we know, you keep hearing calls from us then. So I want to ask you, what are the different types of insurance policy available for multifamily property?
It's actually simpler than you might think. If you had a company that had, I don't know, say a construction company, you need workers' compensation and auto and all these other parts. For multifamily, it's actually pretty simple. You have your property coverage, which covers just that, the actual brick and mortar physical property. So if it were to catch fire, wind damage, anything that physically happens to the property, you have coverage for that. Then you have general liability, and that covers, think of things like slips and falls, accidents that could happen to tenants or guests at your property that you could maybe be liable for. That's what that covers. And then there's your umbrella coverage. The umbrella kicks in when your general liability limits are exhausted. So most general liability policies, you have $1 million per occurrence. Well, what if they sue you for more than $1 million? That's when your umbrella kicks in to cover you for the rest. So there's really three crucial parts in most policies. You may have a need for flood coverage in some areas. There may be a need for maybe earthquake or something like that. But most multifamily that we see, it's all property, general liability, and your umbrella.
Okay, so that's typical for every class of a multifamily, be it A class, C class, and okay.
Yep.
Okay, yeah. The next question I have is when people give us an insurance quote or the breakdown of the insurance, what do you think we should look out for? We are not experts. For example, I was shopping for insurance for my house. I was comparing with the other one. I noticed some difference. The coverage for one was 500, the other coverage was 400. For multifamily, I remember I reached out to you. I said, I got a cheaper insurance for my property. And you were like, no, look at it. What I'm covering is different. I'm covering more than that and all that. So what are the things we should look out for in an insurance policy before we sign off on it?
It's a great question. And, whenever you get a policy, sometimes it's 19 pages of legal jargon and you're going, what am I even looking for? And that's what I do all day long, unfortunately. But I know where to look for and what to expect. The first thing I would look at is this replacement cost or is it actual cash value, right? So when you have a claim, you want to make sure that they're going to replace the property that was damaged. And that's real important. And most of the loans that you're going to get for these multifamily deals, they're not going to accept actual cash value policies anyways. We don't even go out and search for those. We know that they're not good policies. We know your lender's not going to look for them. So we don't even mess with those things. But whenever I see something that is much lower in premium, that's the first thing that I'm going to ask is why is it lower? Is it actual cash value or is it at replacement cost? The second thing I would say is look at the deductibles. If you have a wind hail deductible at 2%, but the other policy is much cheaper, but it's a 10% wind hail deductible, in the event of a hailstorm or you got to replace your roof, I mean, that we're talking about hundreds of thousands of dollars in difference. Now, I do have clients that they're willing to take the gamble and they want these high deductibles. They're just trying to save as much money as possible. Maybe they think I have a brand new roof, so I'll let it ride this year and next year we'll change it. But at least you want to know what's there, what you have, because that will get you in trouble down the road. If it's barely penciling out and you're underwriting right now, well, what if a claim happens down the road? Well, then you're going to be in trouble. So look at those deductibles as well.
Okay, so for example, if we have a property that has consistently appreciated, the value of that property, or because we noticed that to build a property right now, not just a property, multifamily has become very expensive over the last few years due to inflation. So now the value of properties have significantly gone higher than normal. For example, if you've insured your property, let's say 7 years ago for a particular coverage, let's say for $2 million, and that property is now worth $8 million.
Yeah.
What do you do as an investor to keep monitoring the value of your property versus the coverage? Because if anything happens to that property at 8 million, you just get a coverage of 2 million if anything happens. So what do we
Yeah.
get to do as investors?
So the good news is, and a lot of policies, there's kind of inflation riders that are added in there that can take into account for that. A lot of policies that I'll have will have blanket replacement costs. So if one building were to get damaged, you can actually borrow limits from the other buildings to help offset anything that may come in higher than what it's insured for. Also remember, we're insuring to replace the actual wood, nails, brick, right? So the property value itself could be much different than what the brick and mortar actual costs are to replace it. Things like location and how much money it's bringing in. The land value itself has value. The land will still be there, even if everything burned down, the land is still there. A lot of times the slabs are still there. So to rebuild it with brick and nails probably doesn't cost as much as maybe $8 million. So maybe it's only $5 million. But you're right. 7 years ago, we could insure a property for, maybe $80 a square foot. And now it's looking, I mean, if you were to go to build a brand new property, it might be closer to $140 a square foot. It depends on where you are. California might be $300 a square foot. The other good thing is your lender dictates a lot of that too. So at renewal, they'll say, hey, due to inflation, we've got to increase this building amount because if there were damage, we need to make sure that we're getting enough back. And then your carrier is also going to make sure that it's insured at the proper square footage as well to make sure that if in the event of a loss, that you get the right returns. And that a lot of the renewals that we've seen lately, they've come back a lot higher than expected. Of course, we've had some rate increases, but a lot of it is the carriers increasing their square foot replacement cost values to match inflation, just like what you're talking about to protect you. I know you don't like to pay more in premium, but they're actually making sure that you're getting a higher replacement cost value to offset that inflation.
Do you have a standard amount if that is supposed to go up? Let's say 25% increase, or is it just as it comes, you guys will determine that? How do you factor in the kind of increase you have as the year goes by?
Yeah, it's hard. I've told a lot of people, to plan for 20 and then expect maybe 10 to 12. But every location's different and every property's different. These Class C properties in somewhere like Houston that maybe has the bad wiring or the bad breaker panels, there's really not many options for them right now. There's only a handful of carriers that will even look at them. So those are a lot different than a Class A. Some of the Class A's that we've seen, the brand or the newer builds within the past 20 years, we've actually seen decreases in the premium. So I'd love to give you a standard, expect 15%, but it really is, it just differs around the country and asset classes, and there's a whole lot of factors that go into it. So
I just learned something today. I remember when I call you for a quote, sometimes I always think that the standard should be 900 per door or per unit in Dallas. And when I call you, you tell me, no, this one is 1,100. And you said it's because of the size of the unit. Please explain that to the viewers.
Yeah, it's a great question. So the property portion of your coverage is the largest part of the premium. It's probably 75% of your premium. The general liability and the umbrella are fairly inexpensive. And a lot of these big deals, they might be $20,000 or less for both of those when the property premium is $80,000, right? The property portion of the premium doesn't go off the number of doors. It goes off of the square footage of the property. So think about if you were buying maybe one of these kind of boutique big student housings, that maybe near UT Austin, right? And they have they have a basketball court there, and they've got this huge community center with a movie theater, right? Those aren't doors. But now you've just added in 20,000 extra square feet footage of buildings that you have to insure. So the larger the square footage, the higher the premium is going to be. And I've told you this example before. Maybe you have 100 units on one side of the street and 100 units on the other side. If on one side, that 100 units, the average, maybe it's more like a townhome type setting or condos setting, and they're 1,500 a square foot average. And then on the other side of the street, it's a 500 square foot average. So we've all seen different properties like that. Well, one is 3 times larger than the other, even though they still have the same amount of doors. So that's why the per door price I understand you want to use to just to give you kind of a rule of thumb. But if you have something that pencils out, just send it to me and I'll send you a realistic estimate to help with your underwriting because it may come in higher per door, but really the rate is the same. It's just different because it's a bigger property.
Yeah, sometimes I'm reluctant to do that because I don't want to bug you until
Well,
I'm
sure.
sure. Yeah, so
Yeah.
as an investor, what are the proactive steps we can take in minimizing insurance risk? What are things we should be doing on a property?
Right now, I would say the biggest thing is keep your property and your tenants as safe as possible. Some of the properties that I've seen that are struggling the most had a recent big fire claim. We're talking a $6 million fire claim, all 20 units in one building burned down. When that happens, first of all, you're going to have a deductible. It's probably only $25,000. They're going to rebuild that building and they're going to pay you for loss of rents. But then your insurance premiums are going to increase and it could be as much as $2,000 a door. So you were paying $900. Now it's $2,000 a door. Incrementally go down over the years, but that loss will be on the records for up to 5 years. As soon as a big loss like that happens, there's only like one or two carriers that are gonna ride it at renewal most likely. So keep your property safe. Make sure that anything that you can do to mitigate risk is done. A lot of times the carriers will come out, as you know, a month or two after you bind the policy, and they'll do an inspection. A lot of owners hate it because they don't want people messing around with their property and telling them what to do and to spend more money. But really,
Yeah.
it's designed to help you mitigate risk. Hey, there's a crack in the sidewalk here, right up to your leasing office. Someone could slip on and fall on that. I would recommend fixing that. And you're going, man, that's more money. But how much would it cost later on if they sue you for their medical expense? So spend a little bit money now to prevent future injuries and things like that. Know your location, know the risk. If you're in a high crime area, let's protect the tenants. You can't necessarily change the location of the property. You can make it safer. Maybe think about putting better fencing, maybe a gate, better lighting, things like having a security patrol come around. I talked to an asset manager the other day. They have an empty office at their location, and they invite any police officer whenever they want to come in and do office work there, as long as they park their patrol car right out front. They offer free rent to police officers, but your parking space is out front so everybody can see that you're there at all times. So little things like that can go a long way to make your property much safer. And I think those are the biggest things right now to just prevent future losses. Let's wait for this hard market to subside. It's always cyclical. It's a soft market, then it goes to hard, and then hard market goes to soft, and it's been that way forever. So we're in a hard market right now, but eventually it'll start coming back. So just make sure you don't have any problems until the soft market comes, I guess.
Yeah, I know you mentioned this during your last answer that you gave. Normally, when we are looking for insurance quotes, you always ask us to ask the seller for loss runs. What are the things you're looking at for in a loss runs? Let's assume the owner as he had some claims on his insurance. How would that affect the new buyer, or what would that do to a new person taking over that property?
Yeah, it really depends on the nature of the claim. And like I said before, the carriers are going to look back the past 5 years. Anything past 5 years, they don't really care about. What I'm looking at, first of all, is what type of claim was it? Was it a small slip and fall claim that you paid out $1,000 5 years ago? That's not really going to matter. Was it a $6 million fire claim that happened a week ago? That's going to matter a lot. And so if you're underwriting, $900 a door, but that claim just happened, no, that it's not going to be, you need to prepare for it. That doesn't mean don't buy it, but that just means prepare for what you're getting into. If there's an open claim on the loss runs, then a lot of carriers won't even quote it because what they don't want is to be roped into a claim that didn't even occur on their watch. They want to be closed out. They don't want any future damages or anything like that for them to be accountable for. So you want to make sure that all those claims are closed and paid for, and we know the amounts. And every claim is different. A fire claim, bad enough. Is it from a lightning strike, a freak of nature, or was it from arson from one of your tenants that's still there, right? So all those things make a big difference in how it's underwritten and the future risk that comes in. So as more information as you can gather, the better. And a lot of times I'll ask owners, hey, we need those loss runs. Oh, there weren't any losses. Don't worry about it. And it's like,
Exactly.
well, did the owner tell you that? Because I wouldn't believe him. Wouldn't you want to know? I mean, you're about to spend $20 million or whatever. Yeah, know what happened and what's happened on that property. Don't take the owner's word for it. They all of a sudden forgot about that $5 million fire claim 2 years ago. No, they didn't, right?
Mhm.
Get all that information. The more the information, the better chances of I can find you the best option available.
Yeah, so to get to understand what you just said, so is there a difference between a natural disaster and something that was man-made? For example, if we had a flood or hurricane or something that pulled off a roof versus someone that forgot to turn off his gas and the entire apartment got burnt, is there a way the insurance company will look at both scenarios?
Yeah, absolutely. So I think the biggest claims in Dallas are hail claims on the roofs. You know, roofs are really expensive. Unfortunately, hail's it's going to happen probably at least 3 times a year. Your property's going to get hailed on, and it's not just the little thing. You know, a little it's baseball size. A lot of cases. So they underwrite that predicting that those are going to happen in the future, which is why insurance is a little bit more expensive here than maybe, say, other states that don't have as much hail. Kitchen fires are going to happen. That's one of the leading causes of fires and claims in these apartments. Those are things that you can't necessarily stop. You can make sure that, you know, if there's a tenant that keeps starting fire, well, get that tenant out of there. You know, there's something called stovetop fire stops. They're a magnet that goes up on the vent hood, and if there's a flame that comes up, it'll extinguish it. So there's little things that you can do. But yeah, I think that accidents are way different than things that could happen in the future. So for example, if you had a small kitchen fire, that's one thing. But did the fire occur because the wiring in your property is bad? Well, now the underwriter's thinking, what are the chances of that happening again? It's pretty high because your wiring's bad, right? So the nature of the claim really does make a difference for sure.
If somebody has a property owner has something just happened, a loss occurred, can you walk us through the process? What do we need to do if we have a fire or something happen? Do we call you, the loan broker, or call the insurance company? How is the process like?
Yeah, what I would say is your property management company needs to have a plan of action in place, and most do. But I would check with them to make sure that they've got a set plan of action if something were to occur, anything. First of all, contact the appropriate authorities, you know, police, fire, make sure that everything's safe, make sure that, you know, the fire department is going to turn off gas lines and things like that. You know, don't worry about the claim right now. Make sure the property is safe, your tenants are safe, and that new damage isn't going to occur from that initial claim, right? Then once the dust settles, call me, let me know what happened. We'll kind of see what the nature of the claim is. You know, maybe a car ran into the building. Well, that sounds really bad, but if your deductible is $25,000, then maybe it's not worth putting in a claim. Let's just take care of it out of pocket. Now, the damage might look pretty bad, but if you get your contractor to say, no, we can fix it for maybe $30,000, well, maybe that's worth it not even putting in the claim because your net gain is only $5,000 and you don't have this claim on your loss history, right? So that's one thing that we would look at first is what is your deductible? How much do we think it'll cost to fix? And do we need to make a claim or not? If we do need to make a claim, okay, we'll get you in touch with the carrier. We'll put in the claim. We'll have an adjuster reach out to you and then kind of hold your hand through that process. But there are a few steps that we would want to make before just saying, oh, this happened, let's make a claim, right?
Does rental insurance help and also a very good property management help in reducing an insurance? So if all my renters have rental insurance, would that give me a good premium on my general property insurance? Or that does
Yeah.
not play any role at that point?
So it can. First of all, I would make sure that everybody has renter's insurance. I would make that a priority when they're signing the lease that they provide renter's insurance, you know, when they're signing the lease. And then I would have you added as an additional insured to their policy so that if they cancel their policy, you're notified. It doesn't cost them anything, it doesn't cost you anything, but you are on their policy as an additional insured. That way, if there's any changes to the policy, you'll know about it. But yeah, it certainly can. If there's a small kitchen fire that was done by a tenant, you could take out of their insurance policy, maybe at least the deductible to cover some of it, so you're not taking the brunt of that full claim. And there's actually renters policies that are kind of owned by you, the owner, that cover all of your tenants that really help mitigate a lot of that risk from those tenants. It's something that we can get into further on our next visit, possibly.
Mhm.
But yeah, there are products designed that you would own that would cover all the tenants as well.
Do you provide such services?
Yeah, absolutely.
Oh,
Mhm.
okay. It's good though.
Yeah.
It's good that
And
we know. Yeah.
yeah, and property management, I think, is the biggest key to a property success.
Mm.
The correct property management and the correct professionals working there and your relationship with them is going to determine your success. They're going to make sure the property's safe. They know how to work in every kind of incident that's occurred because they've seen it all. They can keep your property occupied. They can get rid of problem tenants. Property management, yeah, that it's huge. So I know that some of them are more expensive than others, but be careful what you pay for because some of the ones that are really cheap, I mean, what are you going to get down the road, right? So, yeah, I think it's huge in your success as well as preventing future claims too, because they're your eyes and ears out there. They're not going to ignore a stray dog or a problem tenant that's bugging somebody, some future claim. They're not going to ignore it. They're going to address it head on. And yeah, it's yeah, hugely important.
It's very huge. I always tell people property management is very critical in
Yeah,
your business. Very,
that's
very
not one area you want to be cheap in.
compromise on. Mm-mm,
Yeah,
no. Yes. My property management company has constantly gone higher in prices, and I've been tempted so many times to change, but I look at the services that they provide and I'm like, do I really want to compromise this in getting quality?
yeah,
So just still do it with them.
yeah.
The last question I have for you is really sad. I wish you had a full day to discuss everything insurance, but I'm happy that you came today. The last question is, what are some emerging trends in insurance industry that we should be aware of?
Yeah, I think what I've seen lately are increasing deductibles. So carriers are trying to do what they can. Believe it or not, they're not greedy, crazy monsters. At least the carriers I work with, a lot of them have been losing a lot of money over the past few years. So they're trying to um, get around that as much as possible. And one of those is increasing deductibles. So just make sure that your policies, if they're at renewal, if the deductibles did increase, that you're aware of it, that you can plan for it. But also, we've seen more exclusions on some of these general liability policies. So, especially for areas that are high crime, you might have assault and battery exclusions, firearms exclusions, animals exclusions, things like that. Um, would we prefer them not to be there? Absolutely. Are they an absolute deal breaker? Not necessarily. Again, that's where property management comes in to make sure that everything stays safe and to prevent future problems. But you definitely want to be aware that those are on the policy, and we're seeing more and more of those with every carrier nowadays. So just make sure you're asking your broker about things like that. And as long as you're aware of it and you can stay ahead of it, I think you'll be okay.
Okay, so for me, anytime you give us a policy, just ensure we have the complete coverage.
Uh-huh.
I don't want to go through the stress. So just help
Oh,
me help
sure.
my.
Yeah, no, what I do is we make sure that it's going to meet your lender requirements. It's going to
Yes.
have all the bells and whistles that they're asking for. It's going to be insured appropriately for your replacement costs in the event of a claim. And it's going to be at the lowest premium that I can find for you within those parameters. And if
Yeah.
there, every policy has exclusions. There's some that are just standard, like war. There's an exclusion for war, but it's on every policy. I'm not going to
Yes.
bug you about that. I'm going to tell you about the ones that are um, not on every policy, that like the assault and battery exclusion, things that
Yep.
maybe, hey, this might be a concern, something that you need to know is there so that you can be aware of. That's what I'll notify you about. Anything weird.
Thank you so much, Lynch. It was a beautiful time. In short, this is one of the episodes I've enjoyed because I gained a lot. There's so many things
Sure.
I did not know about insurance, and you just made it clear. And now I know why you're asking some questions, and now
Right.
why you are doing some things. And I now know why we should stick with you. and all that. So, Ramsey King, how can I know I can see it on your screen, but
Yeah.
for people that are not watching or maybe they're listening, maybe they're multitasking, how can they reach you? And what are the services they should bring to you? So
Sure.
let us know how people can reach
So
you.
yeah, the easiest way is through my email, JT Lynch at rameyking.com. And yeah, for anybody that has a property they're looking to purchase and it pencils out on your end and you're looking to submit an LOI, I would say send me an email with the rent roll, the T12, and the offering memorandum, and I'll send you a free insurance estimate to help with your underwriting. If you're expecting $400 a door and it's 900, well, then you're going to be, really upset in the end when you go to buying that coverage or buying the policy. But if you knew about that ahead of time and you can plan for it, then maybe it's not that big a deal, right? And so I base my estimates on like kind properties we've already quoted recently in the area. Maybe we currently insure the property you're looking at or have in the past. So yeah, just send it over to me and I'll let you know kind of real time what the market looks like to help with your underwriting.
And you're virtually in every state, in terms of multifamily, correct?
Yes, yes.
Okay. Yeah. So guys, it was a beautiful time with JT. I'm sure you learned a lot because I did, and I'm looking forward to doing more business with him. Like I said at the beginning, insurance is it can make or break your deal.
For sure.
Period. So it's very important that you contact people like JT to help you with your insurance quote. Because it has happened to me. I remember I was quoting a deal for 800 and I met with him. He sent me a quote and I saw that it was almost 1400.
Mhm.
And I was like, wow, this alone has killed the deal. And I had to reduce my offer. I didn't get the deal, but that helped me. I would have gone into the deal and I would have been messed up. So it's very important that you contact or you have this kind of relationship on your multifamily deal. Please, this is just for serious deals, not for a deal that you know you don't want to close on. For a deal that you're serious about, you can reach out to him. So thank you so much, JT Lynch. And we have more content on our YouTube page, on our Facebook page. If you've not clicked or you've subscribed to my page, then I don't know what you're waiting for. It is Blue Ocean Multifamily Group on YouTube and Blue Ocean Multifamily Group on Facebook. Thank you so much. Thank you, JT, for giving us this time to just enjoy your education, to enjoy everything that you just said. I'm really, really happy that you made it as a point of duty to be here.
Yeah, my
Thank
pleasure.
you.
Happy to be here and I know we could go on all day, so happy to come back. Just let me know.
Yes, yes, sure, of course. Thank you all and have a wonderful day.